Hey guys, welcome to Business Hub channel. Before I discuss this video content, I would like to ask you to subscribe my channel so that you will receive my new videos coming out every week, and also remember to like and share my videos to your friends and families. Alright guys, let's watch this video. In this video I will guide you how to start a sole proprietorship business. Are you considering starting a business? A sole proprietorship might be the best option. Sole proprietorships provide no legal protection for personal assets in the event of a lawsuit or financial difficulty. When establishing your sole proprietorship in your state, you may be required to submit a doing business as application and register for an employment identification number. Sole proprietorships need the least amount of administrative effort compared to other business structures. This video is for company owners who wish to understand how to establish a sole proprietorship and its advantages. When forming a firm, a sole proprietorship is a standard entity that many entrepreneurs choose. Creating a sole proprietorship is a straightforward endeavor that should include just a few quick procedures. What does sole proprietorship mean? The Internal Revenue Service classifies all businesses founded by a person as sole proprietorships. A sole proprietorship entails that you and your company have the same identity, therefore the business is not a distinct legal entity. If your company is sued or has financial difficulties, you assume full legal liability. This is a sole proprietorship's greatest danger. Illustrations of sole proprietorships. The following are examples of professions who may create sole proprietorships to provide their services to clients and customers: chefs, accountants, writers, personal trainers, landscape architects, editors. The primary focus sole proprietorships are commercial entities in which the sole legal liability rests with a single individual. This implies that the business owner's personal assets are at risk in the event of a lawsuit against the firm. Establishing a sole proprietorship. It is fairly easy to establish a sole proprietorship. There are little formal requirements since you are not required to register your company with the state. Depending on the modifications you want to make to your firm, there are, nevertheless, some items for which you may choose to apply. You may want to take the following steps. Step 1. Change your company's name first. If you want for your company to operate legally under a name other than your own, you must create a DBA. In a sole proprietorship, the single owner is compelled by law to use their own name as the domain name, unless they complete the proper procedures to alter the name. To convert the name of a sole proprietorship to a brand name, you must submit a doing business as application, which permits you to use a new name. You must submit a doing business as application with the state, often via the Secretary of State's office, but the exact agency varies by state. Depending on the jurisdiction, the filing fee for a DBA might range between $5 and $100. When selecting a name, it is necessary to ensure that it is not already in use. Additionally, you should avoid selecting a name that is too similar to another. Visit the U.S. Patent and Trademark Office's website, or your state's DBA registration, to see whether the desired business name is available. Step to get an employer identification number as the second step. As a sole proprietor, you will also require a federal employment identification number, which the IRS uses to identify your business for tax purposes. Some financial institutions demand an IN to create a business bank account. Step 3. Open a bank account for your company. Having a bank account that is distinct from your personal account helps to keep your money structured and less intertwined with your personal cash. It is required that company and personal funds be kept separate. This will also provide you with a better image of your profit and enhance your credibility with the bank in the event that you need to ask for a loan. However, as a single proprietor, your business's assets are not legally deemed distinct from your personal assets, as they would be in the case of an LLC. For instance, a sole proprietorship does not have limited liability. Step 4. Obtain the documentation required by your state. Depending on your sector, you may require certain company licenses, permits, or zoning approval in order to operate lawfully. Check your state's construction permit or regulatory requirements for your sort of company so that you stay in compliance with all relevant rules and regulations. The primary focus: there are no required procedures to file as a sole proprietorship, but you may choose to submit a doing business as application and get an employment identification number in order to register as an official company. The various forms of organizations. There are other alternatives to a single proprietorship that could be more suitable for your firm. These corporations provide limited liability, which means that your business's assets are deemed distinct from your personal assets, so safeguarding your personal assets from penalties or litigation. Company with limited liability. Unlike a sole proprietorship, this company form shields your personal assets from any legal issues your LLC may have, meaning you will not be held personally liable if your organization is sued. LLCs are also known as pass-through entities, since company revenue is not subject to corporation income tax. Profits are instead taxed as personal income only when distributed to the owner or owners. In other words, corporation revenue passes through to owners and is then taxed at individual income tax rates. Partnership. When two or more individuals share corporate ownership, a partnership exists. It becomes rather hard since you must get an understanding with all of the parties in order to establish the terms and agreement. Corporations. Corporations are seen as distinct entities from their owners. 5 types of companies exist: C corporations, S corporations, B corporations, close corporations, and non-profit corporations. Each of these forms of corporations has distinctive governance and taxes obligations. The primary focus: in addition to sole proprietorships, there are limited liability companies, partnerships, and corporations as alternative company structures. What advantages does a sole proprietorship provide? There is a valid reason why many firms begin as single proprietorships. A single proprietorship is relatively straightforward and economical to administer. There is no fee to incorporate, and you are not required to renew your company organization with the state annually. There are no annual owner meetings or state filing obligations, and administrative work is often reduced. The primary focus: sole proprietorships are not required to be renewed yearly, require minimal paperwork, and have low processing fees. What are the downsides of operating as a sole proprietorship? Although a sole proprietorship is one of the most straightforward company structures, it imposes a significant amount of responsibilities on its owners. There is just one owner, and it provides no legal protection for your personal property. If a company owner were to be sued, he or she may lose his or her personal vehicle and house due to business responsibility. Also posing certain security hazards is sole proprietorship. Another disadvantage is that when a corporate identification number is required, the owner must provide their social security number, considerably increasing the likelihood of identity theft. Another disadvantage is that sole owners are ineligible for some tax credits and small company financing. However, they may be qualified for some tax deductions meant for self-employed people. The primary focus: sole proprietorships provide no legal protection for the owner's personal assets and are ineligible for some tax advantages. and small company financing. What are the tax consequences of operating as a sole proprietorship? When paying taxes as a sole proprietor, you must include your business's profits and losses on your personal tax returns. As part of the IRS 1040 file, you must also include a Schedule C, profit or loss from business. This form is used to record the revenue and costs of a company. There is no need for a sole proprietorship to submit a separate company tax return. The proprietor's personal tax return includes a business schedule. Because revenue from sole proprietorships is classified as personal income, it is reported on an individual tax return. You may alternatively be able to file Schedule C Easy, which details your net earnings from the firm. Due to the fact that the loan owner is considered both the employer and the employee, he or she is responsible for paying both the employer and employee components of Social Security and Medicare taxes using Form SE, self-employment tax. The employer part of the tax, however, may be claimed as a tax deduction when completing your tax return. The primary focus: if you own a sole proprietorship, you are not required to submit a separate tax return for the company. Schedule C or Schedule C Easy and Form SE may be required for your sole proprietorship when filing your personal tax return. Frequently asked questions concerning sole proprietorship. Can you recruit staff if you're a sole proprietor? According to LegalZoom, a sole proprietor may recruit staff, but care must be taken not to violate any local, state, or federal rules. Moreover, you must first get an employment identification number. The EIN is required for tax reasons, and a sole proprietor cannot substitute his or her Social Security number with a valid EIN. What differentiates a sole proprietor from an independent contractor? Self-employed and sole proprietorship are fundamentally same terms. A loan owner is the only individual responsible for operating his or her firm. An independent contractor is distinct from a sole proprietor. Typically, an independent contractor is a creative expert, such as a graphic designer or writer, who works for another business or numerous businesses. No taxes are withheld from the earnings of an independent contractor. Taxes related with their operations are the responsibility of sole proprietors. How does forming a sole proprietorship affect insurance coverage? All obligations and liabilities accrued by a sole proprietorship are their responsibility. Due to their personal liabilities, sole proprietors are often required to get insurance to protect themselves in the event of legal action. The sole proprietor should get either a small business insurance coverage or a general liability insurance policy. Does a sole proprietor get paid? No, a sole proprietor is not compensated with a wage. Therefore, you cannot pay yourself a salary and deduct that wage from your taxes. Your compensation is based on the fees you earn for the items or services you give to clients. Well, guys, my video has come to an end, and I hope you enjoyed it. Thank you for watching my video, and remember to like, comment, share and subscribe our channel, so that our channel can grow and bring everyone new videos with new things to learn. Bye bye for now, and see you in my next videos.